Okay, I've got it being recorded, so if you can come back to it if you have something that you think we talked about and want to look it up. I am going to jump into the exam topics, and this one is the in your exam study information in Blackboard. So I'm going to share that screen with you. Okay. If you have any questions, unmute your mic and feel free to ask. Just kind of go over some things in the chapters. Um, if you have questions on anything else, handouts, homework, please let me know. All right, so chapter 10. Students must be familiar with the ratios that are covered on the chapter list. So I provided you with a list of ratios. You can use that during the exam. If for some reason you don't have it, I am trying to work on putting together something on the test itself. However, the issue is going to be that you're only going to get one question presented at a time versus the whole set. So you may have to move forward or backwards. You'll still be able to go back to the questions, skip them, and come back as long as you're within the time, but it's only going to present one at a time. So if you have that list, you can use it. If you don't have that list, don't worry. I'm going to try to make it as easy as possible. For the formulas, you don't have to remember them. It is still a good idea to go over that list. Just make sure that you're familiar and make sure you can figure out where the numbers come from so you have all the calculations and it's not a surprise when you get it. Um, remember using an average in the denominator where applicable. So for here, remember you use an average in the denominator when there is an income measure in the numerator over a measure of capital, like average total assets, current assets, operating assets. Or equity. The exam, you have to go into your lockdown browser to find the exam on Friday. And you'll have to remember that you can't have Zoom open and you can't have any other windows open. There'll be a calculator on it, so you'll have that available. Okay. Jumping down to chapter 4, and I would take this the only topic covered a little bit lately. Remember, we did have the bank statements, and so there may be some questions regarding it, but you're not going to have to do a bank reconciliation. But just remember that there's some info on banking too. Okay. You should know the allowance method for bad debts expense. Yes, that's correct, Madison. You're not coming to Zoom for the exam. You're going straight to the lockdown browser. You can't have Zoom open and have the lockdown browser open. You can text me if you have big problems during the exam, but on most of them, you're just gonna have to make a note on a sheet of paper if there's something that throws you off and send it to me afterwards. There will be a password for the exam, and I will provide that before the exam via email and in the announcement. Okay. All right. No problem. Okay. So students should know that GAP requires the allowance method because the direct method would violate the matching principle. So you got to remember the matching principle. Although the tax code requires the direct write-off method, students should know, and this is not who, but how to record a sale on account and then do the bad debts adjusting entry. And then there are a couple of them. So the first one is a percentage of net credit sales. And so that's company sells $1 million on account, no returns, and estimates that 4% will be uncollectible. So 1 million times 0.04 equals 40,000. So you have bad debts expense. $40,000. Remember, that's under retained earnings. And then you have allowance for doubtful accounts. 40,000. And that's a contra asset account under assets. Contra to accounts receivable. Okay, so that's the first way to do it. And then the second method is as a percentage of receivables. And we'll jump into the aging schedule in a second. Now, there's a little note here. All questions are based on a percentage of receivables. Assume a 0 prior balance. And so this kind of caused some confusion in the class because the example I did had a balance in the allowance account. And so we had to adjust that balance, not just make the entry. Here, we're just going to go ahead and make the entry. So whatever number we come up with, that's going to be entered into bad debts expense. So here, let's say we have an ending balance of $5,000, or excuse me, 30,000 in accounts receivable, and management estimates $4 will be uncollectible. So we have 4% times 30,000 equals 1,200. I'll answer that question 1 second. So we have bad debts expense. $1,200 RE, and allowance for doubtful accounts, 1,200 asset. Okay, I'm gonna pull up the chat 1 second here. Will this be posted on Blackboard with annotations? Yes, it will. I will add it next to the file with the video when it comes across in about an hour. Okay. So that's how that would go. And again, we're assuming already a 0 balance for allowance for doubtful accounts. So you're just going to put that in there. Okay. Now, the second part would be using an aging schedule. And so I'm going to copy this over. Give me 1 second. Okay. So when they're using an aging schedule, typically what they'll do is they'll look at their receivables balance. And so I made something up that's kind of generic, but you can think about this for any type of business. And basically these were purchased, and they were purchased within 29 days, within 30 to 60 days, within 91 to 120, and within 181 to 120. And what you would do as an analyst within the company is say, okay, based on our expectation, what percentage of these buckets do we expect that these would or wouldn't be collected? And yes, I will post this lecture. I'm recording it. It'll go right in that exam study info with this paper copy or with this electronic copy. All right. So what you would do is come up with these rates, and they'd have to be given to you. You would need to know a lot about a business, a lot about the business environment to make accurate estimates. But these are fairly accurate. Think about like a hospital, for instance, that has to go through multiple insurances. Sometimes it takes a little while for things to get back from the second insurance, but as you see things go further out, you have a larger percentage that's uncollectible. And what you would do is multiply each percentage times the number that you have, if you have a number there. And then you would add them up. So you'd have bad, sorry, give me 1 second. I gotta shift the page up for myself. $1,200 retained earnings, and then you'd have allowance for doubtful accounts. That would be under asset, contra asset. Okay. Okay, students will not be tested on how to write off an actual account. Under the allowance method, or how to restore an account previously written off. Should understand the balance sheet presentation of accounts receivable, including how to compute the net realizable value, the classification as a contra asset account, and what net realizable value and the allowance represent. Yes, the exam is all multiple choice. Okay. 25 questions. Okay. Chapter 5, cash discounts. Students will need to know how to record a sale on account where cash discounts are offered. So this should be relatively fresh in your mind. We worked on this last week. The gross method, where the discount is ignored on the date of sale. And then how to record the receipt of payment within the discount period. And after the discount period. The net method will not be tested. So basically record the full sale and then record the discount after. Should also understand the difference between credit card sales and a credit sale. And you should understand the income statement presentation, calculation of net sales, which is pretty straightforward. You're taking away your sales discounts and sales returns allowance. Okay. And then the classification of those as contra sales accounts on the income statement. So just part of net sales. Inventory, which was a big focus. Understand the inventory is a current asset and be able to calculate the cost of goods sold and ending inventory under LIFO, FIFO, and weighted average. Now remember, assuming a periodic inventory system is much easier than having to track perpetual with dates. You assume all of it gets put in to one big pool, and regardless of the timing, you're going first in, first out in perpetual, because we don't do the inventory until the end of the period. Okay. Calculations under a perpetual inventory system will not be tested, so you don't have to worry about a perpetual. No fill in the blank questions. Okay. Students need to know that LIFO is prohibited under IFRS. So there's a little section on IFRS in the chapter. Make sure you read through that. LIFO is not used under international financial reporting. It is used for US financials under GAAP and tax purposes. All right. And remember the little information that I gave you under period of inflation. Which means prices are rising, which is usually the case unless you're talking about some commodities. Commodities like oil have gone up and down in the past. Right now they're down, so that would be a deflationary period. LIFO will produce the highest cost of goods sold, lowest gross profit, lowest net income, and tax expense, lowering inventory. So that's why this tax expense, this is why would like to be able to use it to lower their taxes. However, there's a rule in there that says if you use it for tax purposes, you have to use it for financial reporting purposes, and you also have to reconcile to FIFO, and as a result, you end up doing about twice as much work. Okay, so now I'll open it up to you guys for questions. I went over 2 of the quiz problems. We went over the classwork. The answers are out there for the classwork, the questions that we didn't cover in class. And so if you have any questions on any of the chapters, now's the time to pop on or post in chat so I can answer them for you. I will have office hours today from 1:15 to 1:45, 1 or 2 o'clock, somewhere around there. Yes, all of the lectures that we've done on Zoom have been posted online. Yes, so someone had a little trouble hearing me there. All of the lectures I've done on Zoom video are posted online. No, if you have questions now, please feel free to ask them. I did quiz numbers 1 and 2 in my last lecture for chapter 5. So I'd ask you to go back and look at that. The one dated 3/23, if you have questions on chapter 5, quiz 1 or 2. But other than that, I'm more than happy to answer any questions about specific quiz problems, chapter 4, chapter 10, the third one. If you don't have any questions, then you are free to go. And I will see you after class. I'll be on for office hours after your exam, but you'll want to jump right on to the exam. There's 25 questions. They're multiple choice. You'll have about 53 minutes to do them. Nope. The only classwork due is the one in Pearson. Yeah, quiz number 2 is on the last lecture as well. Chapter 4, quiz 2, somebody asked about. So I'm going to go ahead and pull that up. Give me 1 second. And I'll share my screen with you once I get it going. Once you go into the lockdown browser, you just go into assignments, and that's where the exam will be. It is okay if you don't get a perfect score on the classwork. What I'm looking for is that you tried all the problems and gave an attempt. So as long as you get a 70 and you've done all of the problems, then you're fine. But don't just stop after you get to 70. Make sure that you do all of the questions. Okay, almost got it there. The quizzes, the reading quizzes, this past one was in Pearson. I had been doing them in paper in class. The next one, I will let you know on Friday where it's going to be. It'll be due on Monday. You cannot be on Zoom during the exam. You do not have to come on before the exam. Once you go into the lockdown browser, it's going to require you to close any of your browsers and Zoom. And so the only thing you can have open is your is the lockdown browser. Okay. So let's go ahead. I'm going to pull up chapter 4, quiz 2, and then I will go over question 8 on the classwork next. Okay, I'm going to share my screen with you. Okay. You have to forgive me. I have to move some windows around here just so I can read everything. Okay. It says that he uses the allowance method for bad debts and adjusts the allowance for uncollectible accounts to a desired amount based on the aging of accounts receivable. So it's similar to that aging schedule that I just showed you. At the beginning of 2011, the allowance account had a balance of $20,000. Credit sales totaled $500,000 and receivables of $18,000 were written off. So let me just pull up. What we have is a beginning balance in the allowance of 20,000. And it says we wrote off 18,000. The year-end aging indicated that 21,000, a 21,000 allowance for uncollectible accounts was required. So we have a desired ending balance of 21,000. And so it says record the transactions including the beginning balances into the account equation. So we have the allowance, beginning balance, $20,000. Okay, I don't see any other beginning balances given. And so we have to jump down to the transactions. And so it says enter the beginning balance for the allowance account, then record the transactions in the accounting equation, round your answers to the nearest dollar, use parentheses. When entering contra account balances or increases to those accounts, leave unused cells blank, including accounts with a zero balance. Okay, so we entered in the beginning balance of the allowance, and now it says during 2011 credit sales totaled 500,000. So we have 500,000. And that's accounts receivable. 500,000 sales revenue. And it says receivables were written off. 18,000 on the allowance. And I think they would want us to net it because I don't have enough space here. And so I'm just going to see what they have here. This should be 482,000. And how I got that, I'm typing it in the chat. $482,000. Okay. All right, and so it says, what is the bad debts expense for 2011? So we had a beginning balance, and I'm going to put it in as a negative of 20,000. We added 18,000 because we wrote some of it off, and then we have an ending balance of 21,000, and that will give us our bad debts expense. Okay, so we combine the like terms and we get minus 23,000. No, that's not right. Sorry. That 21,000 is going to be minus a minus. So we get minus 2,000, and then we have minus a minus 21,000. And so that equals 19,000. So number 2, bad debts expense would be 19,000 for the allowance and 19,000 for bad debts expense. I was combining the terms 20,000 plus 18. So minus 20,000 plus 18,000 equals minus 2,000. And the 21,000 was a negative. So should be minus a minus or plus when moved to the left side. Okay. So number 3, what information will be disclosed on the balance sheet at year end? So you'll have accounts receivable and they're going to be net. And so you have a $21,000 balance. And so 482 minus the 21,000 would be 461,000. And what I don't know is if it wants you to put them both in there, because it should have both pieces, but sometimes some companies don't do it. Sometimes companies do it just net. Oh, I don't know if it's going to like my commas. We'll see. Allowance. And then, well, will be disclosed on the balance sheet. So that's all we need there. What's bad debts expense for 2011? 19,000. And so what information will be disclosed? Accounts receivable net of the allowance accounts for 21,000. And then the information that's disclosed shows the amount of the company expects to collect. Okay, let me move some windows around here. And we'll throw the check answer up. Oh, hey now. All right, let's show the completed problem. All right, so I didn't put them in the right order, but I have all the information there. It just doesn't have the requirements. I didn't understand the requirements correctly, but made all the calculations properly. So 19,000 in bad debt, 500,000 in accounts receivable, 18,000 in accounts receivable, 18,000 in allowance. I netted those two, and the rest of it is correct. So any questions there? Okay, I'm going to jump to number 8 on our practice questions. Give me 1 second to pull it up. Practice. Okay. So I'm going to share this one. Okay. Now, is this the question just confirm for the person who asked before? No. Okay. Were you meaning on the actual Pearson class question, like in Pearson? Okay, let me see if I can find it. February. So I'm showing it. Is this is a different company. This is King Distribution Company. So you went flush. All right, let's see. No. Is this the similar one, Madison? All right, so I don't have them listed. I have them numbered like P. You can see up in the corner here, 5-45A in the upper left-hand corner. Does it have a number? Okay. What's that? Is this that number? 5-45A. Okay. So this is the same one. So somebody asked about this one. So let's go through and take a look at this one. Okay. Says the beginning company started with a contribution of 12,000 in cash in exchange for common stock. Company engaged in the following transactions. So hopefully you guys can see those transactions. It's a big problem like we did in class. All right. Do you have a specific part of the question? Okay. So I'm going to kind of guide you to our in-class problems and the solution that's there, but I'm also going to do a little bit of it here and we'll kind of follow through with the questions. So I'm going to minimize the chat window and just kind of walk through a little bit. I've got to open up something separate there so that I can see this. Okay. So it says you click on the requirements and it gives you the requirements. And I'll put these in our chat as well. Okay. So the first one says, enter each transaction in the accounting equation. Assume the company uses a perpetual inventory system. Start with the opening balances in cash and common stock described at the beginning of the problem. All right, so I don't know, for some reason it seems to want this at the bottom, but we'll say 12,000 cash, 12,000, oh, not retained earnings, sorry, contributed capital, 12,000 common stock. Okay. I'm trying to get this. Okay, so basically you have to advance the problem to move to the next part. Okay. Okay, so now it's asking for the February 2nd transaction. So you have to look up and it says purchase merchandise on account for Pierce Supply Company. So you hit this little I and it gives you your your February 2nd transaction. And so what happens, we purchase merchandise on account 8,000 inventory. We have a liability, 8,000, and that'll be accounts payable. and then we check the answer, and it gives us the next one. It says enter the revenue portion of the transaction. So you just click on your blue eye again, and it gives us sold merchandise on account, $6,400 for 6,400 terms, 910 net 30 FOB destination. The cost of the merchandise sold was $4,900. Okay. So 6400. Sales revenue. Accounts receivable, sorry. And then 6400 sales revenue. Okay. So that's all you've got to do for that question. Do you have any other questions? If you do, pop back on before 2 o'clock and I'll be more than happy to help, or you can send me an email. All right, everybody, have a great day.